we think we're in a fat tail environment. What do I mean by that? I mean, we've got a market that's rallied substantially, and yet earnings and dividends estimates haven't, they've been going the other way. So it's a market that's got expensive real quick, and so the value's sort of eroded. So the forward return outlook for equities in particular is pretty subdued, and yet volatility, as we've been talking about there, is just really high. So the VIX futures are still in the 30s if you go out sort of into next year, and obviously bond volatility has been quite high as well. So you've got an environment where you've got fat tails. So you've got risk to the upside, which is, if we get a vaccine, or we get back to normal a lot quicker, this V-shaped recovery, you want to be in the market for that. But on the flip side is we've seen today how jittery the market is, and what if things get worse and there's a secondary lockdown, etc. You want to be long gold. So we're basically saying, look, take out some protection to the downside by owning gold in the portfolio, and take some protection to the upside. We were in travel stocks, but they've run so hard. We probably think the miners and or the financial services sector is the way to play the upside, and you probably don't want to own too much in the middle, to be honest.
Virus cases are still on the rise. Is that the biggest risk for markets at the moment? Because the WHO overnight saying the spike is not just due to more testing.
Yeah, look, it's the existential threat, isn't it? So, Matt, I think until we see a downturn in the number of active cases, we've just got to stay cautious. And it hasn't really taken off in Africa yet, which has about 15% of the world's population. But, places like India that have very dense populations, Brazil, etc., continuing to pose a threat. But I think the thing that's emerging as well is concern about trade, but also concern about the election and how far behind Donald Trump seems to be getting, and what sort of measures he will take to try and regain his popularity. And that probably includes taking more risk on the coronavirus, probably means more anti-China sentiment. So I think there's some emerging risks there, but you're spot on. The coronavirus is going to stay front and central for investors, but I think there's some emerging risks as well.
Big day for global PMI data as well, particularly in the US and Europe. Are you expecting to see a further rebound there?
Yeah, we're all looking to these flash PMI data. We've had Japan and Australia today. I mean, Australia was actually a bit better. Manufacturing and services both improved. Japan a little bit softer than we'd hoped for, but we're looking to get back into the mid to high 40s in both the Eurozone and also the US PMI data tonight. And there's probably a little bit more focus on services than normal, because services is where all the jobs are, right? Manufacturing's probably higher beta, but going forward. So if we get a number in the sort of mid to high 40s in both manufacturing and services PMI data tonight, then that'll keep us on course for heading into what's going to be the recovery quarter, which is the third quarter, which starts next week.